All right, starting from a daily from a daily chart. Yesterday, the market has consolidated. This consolidation was preceded by an expansion. Okay, so the market expanded, consolidated, and left right through this consolidation left a fair value gap inside of the range. So going into CPI today, right? The idea is that will CPI need to use this bullish PD rate to form the low of day, or is it really bullish and leaves it breakaway? Right? Maybe simply trades inside the NWAG. Right? We have the NWAG at these levels, the new week opening gap. Price trades to these levels and starts expanding higher, never using this right to create the low of week, rather leaving it as a breakaway. Okay, so that's really the discount area of interest here at this range. Obviously, there's the new week opening gap, right? If the market is really bullish, could simply use those levels, trade higher from there, leave this as a breakaway. Previous day's high here, okay, is important. Um, it could be, because currently both assets are, both the ES and NQ are trading next to their high, so I think there is a chance, even if today is bearish, that both of them might want to take it. But if today will be some kind of retracement day, okay, for then Wednesday to either reverse or continue, then what I wouldn't want to see is this high being traded above too much, right? Some kind of displacement above the high. That's not something that I would want to see, right? For this scenario, a scenario where Tuesday would come back inside of the range, right, and then Wednesday from there would reverse or continue the lower time frame downtrend. So let's see how this looks like on the lower time frames. This is the 4 hour, the beginning of the week, right? So far, the market has consolidated around one of the fair value gaps of interest for the weekly profile. Well, we have these two. These are both above 50%. Again, I believe that this one is more important because it cuts through the previous range high, which is an order block. But yeah, this is a possibility that I was talking about, right? If the market is really bullish, it could even leave this as breakaway, or like it did here, right? And some kind of IO fed, and from these levels keeps expanding higher. Now, the market at these levels has opened without a wick, okay, under the new day opening gap. Right. The thing is that it could always just do this, right? Because we'll look at it on the hourly time frame, and the market comes from a shakeout at these levels. But preferably, I would like to see some kind of wick. But I do understand if it's going to expand, right? As long as intraday the other sessions leave strength inside of the range, I don't really mind, honestly, that if today was to be really bullish, okay, and doesn't leave a wick behind, because the market comes from a shakeout and because the market comes from a consolidation, right? So this can favor a phase of expansion. But best case scenario would be something like this, right? So it doesn't have to be much of a wick, doesn't even have to come back inside the fair value gap, right? It can come back inside the high resistance in here, have some kind of a shakeout in the range, and then keeps expanding. On the hourly chart, there's a 3-day look back, right? We can see today consolidated, okay, still left some fair value gaps open in the range. In terms of premium target, right, low hanging fruit for the week, 30K, located around minus negative 2.5 deviations of the final shakeout, which is in the 3-day look back range and is also the dealing range low. Right, so it's the last shakeout in the range before the expansion. Now we're in a phase of consolidation still. And if we look at the previous previous daily profile. Obviously, consolidation profile. To me, this is a seek and destroy profile. Right, the market taking the highs. Oops, it didn't take these lows, but it took the lows inside of here. On the 4-hour chart, I think it's more obvious, right? The market established a range on the first 4-hour candle, then an inside bar, right? Then a bar that takes the high and the low inside of the range. Same scenario here, takes the high of the range, then this candle, another engulfing, right? So we have 1, 2, 3 engulfing one after the other. That's typical of a seek and destroy. Right, so if we look at the profile, right, the market has actually consolidated more inside of premium than it has in discount, right? That's where most volume on the day was formed. And so we can find look, because the day, usually when the day is consolidation, usually what it is on consolidation days is some kind of order block, right? That's what the market tends to leave behind or trade around, right? Even if the next day is going to be some kind of consolidation, right? Like something like this, simply something that extends the range of the consolidation. It's usually not a fair value gap, right? It's mostly some kind of order block located near 50%. So could it be this down close order block, right? In terms of the PE of the day, I think that's pretty reasonable. Okay, maybe if we look at the profile on let's look at it on a 15-minute chart. Okay, so how can we view this? Right, the market established a range in discount. Right, then through at the 10 a.m. 4-hour power of 3 creates a divergence at, I believe these were the pre-market lows. It left double bottom with the Asia lows and with the open. Okay, so some kind of triple bottom here. Okay, so in case of some kind of a bearish day or bullish New York reversal, right, this is a good scenario. Right, the double bottom gets taken out, and then you would want to see New York reverse. Or if the profile of day comes from a shakeout at the highs, right, then New York is at these levels, right, very likely New York could do something like this to trade lower. At least inside, or at least into the London close range, right? And then at those levels, just watch out, because price will be trading in key discount arrays. Sorry. And you know, for the weekly profile, this could represent an area where price could start doing this, and it doesn't have to do it on Tuesday, but it can start creating the high resistance on Tuesday, right? And then Wednesday will trade around this range, and the PDA is left at these levels. So even in case, say, able to, you know, this will all say 830 here at these levels expands lower, leaves a fair value gap, 930 retraces into it, right? There's going to be CPI at these levels. What I mean is don't anticipate some kind of, right, large move lower, because the daily order flow is still bullish, right? There's a fair value gap at these levels. We have no narrative currently to assume that price will come back, you know, inside the range of the 3-day look back. So just, you know, all depending on the profile, obviously, pay attention to all these things, right? Where is price trading around premium? What time of the day is it? But again, that's a scenario where price would need to come back in the range to form the low of day. Now, if price is really bullish, well, let's look at it, right? Let's see what it can do at these levels. We were looking at the profile, okay, and what we can see is that where do we find the final shakeout of this range? Right, well, we find it through this order block here, right? Because what did price do? Price expanded, consolidated, manipulated, okay, had a shakeout in the range under, these are the lunch lows, right? This happens inside of the last hour, raids the lunch lows, and since then at the open, right, has expanded higher. So I believe that this order block will be important to today's range. I think it's the same levels on the hourly, right? No matter what the profile of day is, okay, whether could be something like this, right? This is the idea. If price is really bullish, doesn't need to come back inside the discount fair value gaps. it simply holds the range of the order block from the previous day's range, right? The wick, it has a large wick here, so and this wick is also located under the daily open, right? So in case you see something like this, right, Asia or London forming a low at these levels, and by the time you come inside New York is already trading above the range, or CPI has expanded above the range, then this can be good enough to form the low of day. This level could also be used for inversion, okay? So that would be in case of a bearish breaker. Definitely a valid level to use as a breaker. Honestly, if it's a breaker, then I'll probably only focus on the wick, right? Since the wick is so large here inside of the range. So yeah, so this level can be used as a level for a low of day or as a means of inversion. Yeah, well, what I was thinking about was like if there was a scenario where price could do something like this, right? This can be a possibility. Ideally, it's related to CPI around these levels. But yeah, this level used as level of support, level of resistance. Okay, so continuation or inversion. Okay, low-hanging fruit for the day. Say the profile of day develops, okay, around this range, or he even simply sees a sweep of the previous day's range, something like this, and then eventually starts shooting back higher. You can use this as a reclaimed PD, right? In terms of low-hanging fruit, you have 29,500, okay, all depending on obviously where your entry is. There's a potential 3, 4, 500 ticks to go get. If not, there's -2 standard deviation, which lines up around 29,750, right? So from the current open, this would be about 1,500 ticks. If today is going to be some kind of either an expansion day or a New York reversal that doesn't need to trade too lower in the range before reversing, right? Maybe at most, either this, right? Then I think that the market could easily trade to 29,750. Overall low-hanging fruit for the week is 30,000, right? Aligns with standard deviations that we have from the current dealing range, from the last real shakeout here. So yeah, keep these standard deviations on your chart. I think they're pretty valid, right? No matter the scenario, but there's a lot of scenarios that price could do here, right? It could do this, could do this. Currently, you can see where we're consolidating around 1 to 1.5, right? So, can we argue that at these levels was the smart money reversal, right? Ended up having the low risk buy, and now we're inside the first stage, right? All depending on what you believe the market maker model is, either the first stage or the second stage. Right, maybe if you consider that the first stage was done at these levels, it's a possibility. Okay, so PD of interest, the order block, the last hour macro order block that was created. We still have here these two fair value gaps on the 4 hour, okay, in case today is a retracement day or a bullish reversal day. Also a consolidation day, could do this for all that matters. And in premium, right, 29,500, 29,750, 30,000. I mean, could it get to 30,000? If it's an expansion day, a classic buy day, I think even 30,000 can be a good level. These levels all all coincide with standard deviations, so good confluence for that. Yeah, cool. So discount, premium, current range. Okay, so obviously remember the CPI at 830. Very important to see where the market comes from before it, and what obviously did CPI do, right? Because a lot of time what could happen is you get this type of candle, right, on CPI, which leaves a large rejection block, on either side. And usually the market tends to chop inside these levels, right? 930 may open at these levels, trade to the highs, and then start consolidating. So if you start seeing this type of price action, then honestly, I would recommend just waiting for 10 a.m. Okay, so 10 a.m. and seeing if there's some kind of divergence with the CPI high, or the market starts expanding lower, and then either under the 830 open or with the opening range low, right, creates a reversal to trade higher. Okay, so this type of candle tends to lead to more chop. If not, there's obviously the big expansion, right, which usually leaves some kind of fair value gap at 50% of its range, or even 25% of its range on the lower time frame, say on like a 5-minute or a 15-minute. Okay, and that fair value gap is very important for the opening range, right? Because what could happen? Well, retracement into it to trade higher, or right, 930 creates some kind of consolidation, raids the high, divergence, and then breaks the range and uses that fair value gap as an inversion level, right, to then trade towards the 830 lows. And if the profile of day is bearish, then could even trade, could even be the path to make a new low of day. Okay, so keep these levels on your chart, and we'll see the profile tomorrow.